Now, we promised you Larry Kudlow at 9:35 Eastern Time this Friday morning, and we've got him. Ooh. The man's on time. Well, of course, he's used to the discipline of television. Larry, welcome to the show. It's very good to see you, sir. Forgive me, I want to start with China. The president's tariff tweet rattled the market, but earlier this morning, futures jumped on this unconfirmed report from another network that the president could delay or halt those tariffs if China takes positive action. Do you know anything about this at all?
No, I'm not going to fiddle with that. I mean, what he put out yesterday is what he put out, and the deadline is September 1st. And by the way, I mean, the president's tweets, as I'm sure you read them, were very respectful and positive. Yep. I mean, we're looking forward to meeting with the Chinese team in early September and continuing the negotiations. The issue here was when the team came back, Ambassador Lighthizer, Secretary Mnuchin, they reported to POTUS. We had a meeting on it. The president is not satisfied with the progress on the trade deal. He also was a little disappointed that he doesn't think the fentanyl issue has been resolved in China. Yeah. And so he's put this 10% tariff on the $300 billion. But no, Stu, I don't want to play any games with that. I have not heard anything definitive.
But I have to bring you into this one as well. And there is speculation in various quarters that China could impose martial law on Hong Kong this weekend. Now, we've just had live pictures from Hong Kong showing that the protesters are gathering all over again. Do you put anything into this at all? Martial law in Hong Kong Sunday?
Well, look, Stu, I'm not an expert on Hong Kong. I think that would be most regrettable if your report is correct. That's not part of our trade discussions and so forth. It's a separate item.
It's part of Xi Jinping's worries.
Yeah, well, I reckon so, and I'm a freedom person, and we want to help freedom-loving people all around the world. So if those reports are true, it would be most regrettable.
Here's another one for you. Interest rates. The negative yield of interest rates in Europe. German Bund rates just hit an all-time low, and the 30-year bond in Japan also hit a negative yield. I think this is the most underreported but most important story of the day, because we in America, this is my opinion, Larry, don't we have to match those lower rates from over there, or at least reduce our rates so that we fall in line with them?
Well, I know at some point, Stu, being the great reporter you are, we will get to the strong jobs report and wages and income, but we'll put that aside.
Look, but this is more important, Larry. The world has never seen this before, ever in human history, and it's happening right now.
Well, you're the anchor, and I got to go with you, buddy. So here's, I think rates in Europe are low and negative. I think that is quite unusual. I think to a large extent, Stu, it's a function of their terrible economy. Nobody is growing in Europe today. And in fact, there's evidence of a spreading recession. So that's point number one. Real interest rates have collapsed. Second point, the European Central Bank keeps pouring money in. I guess more to come. I do not believe, this is just me talking, that more liquidity and more quantitative easing is going to do the job. They've been trying that for many years. It doesn't work. What Europe has got to do, in my judgment, and maybe we'll have some of these discussions at the forthcoming G7 meeting in France, they need to make reforms. They need lower tax rates. They need lower regulations. They need to have more market-oriented energy. They need to reduce trade barriers. That's very important. In other words, Europe needs a pro-growth agenda if they expect to normalize their interest rates. Just pouring more and more money in is not the issue. And I will add one additional point. You've heard President Trump speak to this. He does not like the idea that Europe, either wittingly or unwittingly, is essentially manipulating the euro currency downward. That sets up an unlevel playing field. Nobody's real happy with that. So they need structural reforms, in my view. Let's get some pro-growth supply-side measures in Europe. In fact, now that you remind me, I'm going to tell that to them at the G7 meeting.
Good luck with that, Larry.
Yes.
Good luck with that. Now, the jobs report. It shows.
Thankfully.
No, wait a second. It shows a slowing growth in jobs. It's slowing down. The manufacturing growth rate has slowed down. That's not a great report. You described it as a great report. It's not, is it?
I know it's a pretty solid report, 164,000 jobs and so forth. Manufacturing, by the way, has been picking up in recent months. I acknowledge it was in a slump for 5 or 6 months. We're now seeing a pickup both in manufacturing itself as well as manufacturing jobs. That's good. Look, we faced severe monetary tightening in 2017 and 2018. It's a wonder we're growing at all, although we're hovering still around the 3% mark. So I think it's a very good report. One thing I really love in this report, actually there's two things, but here's one. We're seeing the civilian labor force. People are coming out of the woodwork back to work, okay? If I have these numbers right, 370,000 this month, 335,000 last month. The household employment numbers, which pick up small businesses too, were up 283,000. Those are extremely positive signs. And one last point, if I may, the wage number today ticked up a little bit. I guess it was 3.2% year on year. But, if you look at the broadest numbers, salaries and wages and salaries, they just went through upward revisions. We're looking at, what, a 5.5% year-on-year gain for all wages and salaries. Hang on, 4.1% after inflation, so that's real incomes. And the biggest beneficiaries, the fastest growing group in the increase in labor compensation, is the bottom 10%. So this is, I think, an astonishingly positive, diversified, rebuilding growth prosperity cycle of this economy that is touching all Americans. So, yeah, I think there's a lot of great news out there.
Well, that revision in wages and incomes and basically spending power, that was buried in the media. I only saw it in the Wall Street Journal. I didn't see it anyplace else, and yet it's a terrific report.
And by the way, of course, I'm not shocked that you would cover it and the Journal would cover it, and maybe nobody else would cover it. And, it's my blessing to be able to remind you of these important numbers. I'm trying to be as helpful as possible. But I want to raise one other point, Stuart Varney. The saving rate has jumped all the way to slightly above 8%. Now, the reason I raise that is people are spending. Consumer spending is very strong. The wages are strong. The total salary and wages compensation is strong. But this is not a debt-driven expansion at all. When you have an 8.1% saving rate, that shows you the fundamental strength of more people working successfully and earning more. And, of course, I hope the Federal Reserve is taking note, because there is no inflation while this good news is happening.
In the second quarter, growth annualized about 2%.
Yes.
I know you expect it to pick up in the third and fourth quarters, but tell me what makes it pick up. What's the factor that pushes us to a better growth rate? What is it?
All right, great question. So, first of all, I'm looking at the May and June numbers, particularly June, because that steps you into Q3 in July as the data is. So retail sales and consumer spending very, very strong in June, continuing that pattern. What's really interesting is durable goods, particularly the so-called core capital spending durable goods. Big increases, Stu, in June, both orders and shipments, and we did see an increase in May as well. Those had been faltering in the prior months. I would say the same about the manufacturing report. So it looks like we're coming off Q2 in a very positive way and stepping into Q3. And so I'm really quite optimistic about the second half of the year now.
All right, Larry Kudlow, is always a pleasure. And we thank you very much for being with us again today, Larry. Good stuff.
Thank you, Stu. Great pleasure.
Thank you, sir. All right.